In theory, placing a Fibonacci time zone on the chart, then placing the first point of a Fibonacci arc at the same point that begins the Fibonacci time zone at a reversal point, then extending the second point of the Fibonacci arc to the fifth line of the Fibonacci time zone horizontally, in other words straight to the right side, can project some Fibonacci arcs for an element of time analysis during the early stages of a trend developing. Ideally, this should provide Fibonacci arcs that are proportional to the Fibonacci time zone, so that the 8 and 13 Fibonacci time zone lines line up close to the beginning of these arcs. And it's great if the line at 21 and beyond also line up close to the Fibonacci arcs, but this will usually not be the case, and the main focus is on 13 and especially 8. In this example, the Fibonacci arcs are not close enough to the Fibonacci time zone lines, meaning the intervals are too wide and it produces poor results. Objectively too wide is when the Fibonacci arc and Fibonacci time zone lines at 8 and 13 are more than 1 unit of time apart. So in this case, since it's a daily chart, the Fibonacci arc and Fibonacci time zone lines are 2 days apart. That would be 2 units of time, so that's too far apart. Only 1 unit of time or 1 day is acceptable in this case. It simply means the Fibonacci arc will be proportionally too large compared to the Fibonacci time zone. If you want to learn more about the Fibonacci time zone and other Fibonacci time tools, there are already plenty of resources on the Ascencore website you can check out, so that way you'll better understand why certain intervals are chosen in these examples. But in short, we want a shorter interval in this example, so the arcs will be proportionally closer to the Fibonacci time zone lines in such a way that there will be 1 unit of time or less between the Fibonacci arc and the Fibonacci time zone lines. That is indeed the case here. Using the time measuring tool, we are 1 bar apart for these intervals. Since it's a stock chart, there can be more than 1 day displayed even though it's still 1 bar or 1 unit of time, especially when it's, like in this case, a few days when there's a break and the market is closed, such as with a weekend or holidays. And the idea is that the resulting Fibonacci arcs, especially those close to the Fibonacci time zone lines, will approximate the path of some moderately sized retracements and even trends, along with continuation and reversal ranges such as the double top formation near the end of this Fibonacci arc. This combination of proportions with these Fibonacci tools can be an additional choice to areas of significance in price and time that have been identified by other methods.